It never feels like collapse when you're inside it. It feels like noise, like confusion, like a slow, spreading sense that the rules that once held everything together no longer quite apply. But no one can point to the moment they broke. For most Americans, that feeling didn't arrive with sirens or empty shelves. It arrived with prices that stopped making sense, with debt that grew faster than income, with a quiet erosion of stability that seemed personal but wasn't. Every empire that has ever fallen passed through the same psychological phase first. Not panic, not chaos, disbelief. People sense something is wrong, but the system still looks solid enough to trust. The buildings are still there. The government still speaks. The market's still open every morning. And yet underneath, something has already shifted. The Roman Empire went through it in the 3rd century. The Weimar Republic fell in the early 1930s. And the United States is experiencing it now. Historians who study collapse describe it not as an event, but as a sequence. 7 stages, each one harder to reverse than the last. Stage 1 is financial strain. Debt expands. Productivity slows. The system starts borrowing from its future to keep the present stable. Stage 2 is political distortion. Policy stops serving long-term stability and starts serving whoever shouts the loudest or pays the most. Stage 3 is institutional decay. Trust in courts, regulators, and governments weakens. The rules still exist, but enforcement becomes selective. Stage 4 is social fragmentation. Groups turn inward. Everyone feels squeezed, and blame begins to circulate. Stage 5 is loss of narrative. The old story, the one that told people who they were and where the country was going, stops working. Stage 6 is something far more dangerous. It's when people no longer trust the system, but still depend on it. They don't believe the currency is stable. They don't believe the debt will ever be repaid. They don't believe the future will be better, but they have no alternative. So they keep participating anyway. They keep saving in money they don't trust. They keep working for wages that buy less every year. They keep investing in markets that feel increasingly disconnected from reality. That's where the United States stands today. Not in collapse, not in stability. In the narrow, unstable zone in between. You can see it in the numbers. Trillions in new debt added in just a few years. Interest costs that now rival defense spending. A financial system so leveraged that even small shocks require massive intervention to prevent collapse. You can see it in behavior. People taking on more credit just to survive. Households carrying balances that would have been unthinkable a generation ago. A quiet desperation beneath the surface of everyday life. And you can see it in the stories people tell themselves. That this is temporary. That it will somehow fix itself. That growth will outrun the debt. That is exactly what every late-stage empire believes. Stage 6 feels calm compared to what comes later. There are no riots yet. No currency resets. No open collapse. Just a strange tension in the air. A sense that something foundational has cracked, but not loudly enough for everyone to admit it. And once society reaches this stage, it no longer collapses because of a single disaster. It collapses because too many people are standing on something that has already stopped holding their weight. When systems reach stage 6, the most dangerous thing about them is not weakness. It's inertia. Everything keeps moving even though the foundations are hollowing out. Banks still issue loans. Governments still pass budgets. Markets still rise and fall. From the outside, it looks like life is continuing. But beneath it, the math no longer works. In healthy systems, debt grows alongside productivity. The future pays back the past. But in late-stage systems, debt grows because productivity cannot. Borrowing stops being a bridge and becomes a crutch. The United States crossed that line quietly. In the 1980s, federal debt was about 30% of GDP. By the 2000s, it was over 60%. Today, it sits well above 120%. That number matters less than what it represents. It means the country is now consuming far more than it produces, and making up the difference by issuing promises. Those promises don't disappear. They pile up. Every bond sold, every deficit financed, every bailout funded creates a future claim on American output. And when there's more debt than the economy can realistically service, the system has only three choices. It can default, it can inflate, or it can quietly transfer the burden to someone else. Stage 6 is when the third option becomes dominant. You don't see dramatic collapses. You see subtle shifts. Savers lose purchasing power. Workers fall behind inflation. Asset holders grow richer. Debtors get relief. No laws are broken. No resets are announced. But the system slowly rewrites who pays. This is why people feel like they're running faster and getting nowhere. Wages rise on paper but shrink in reality. Savings accounts earn interest that never catches inflation. Housing and necessities drift out of reach. Nothing is officially wrong, yet everything feels heavier. That is the psychology of Stage 6. People don't rebel because nothing looks broken enough to fight. They adapt. They downsize. They borrow more. They invest in riskier assets. They accept volatility because stability is already gone. The economy becomes a pressure cooker. Those who own assets, stocks, real estate, businesses, float higher as inflation lifts them. Those who rely on wages and savings sink. And because the system never openly admits what it's doing, people blame themselves. They think they made bad choices. They think they failed. But what they are experiencing is not personal. It is structural. Every late-stage system creates the same illusion that hardship is individual, when in reality it is mathematical. At this stage, even governments become trapped. Raising taxes risks revolt. Cutting spending risks recession. Default risks global chaos. So they do what every indebted empire eventually does. They delay. They roll debt forward. They issue more promises. They expand the system to avoid collapsing it. The result is not stability. It's fragility that looks like stability. A financial system that can survive only as long as nothing goes wrong. And when systems reach this point, they don't fall apart because people stop believing in them. They fall apart because they finally run out of room to pretend. The most unsettling part of Stage 6 is not how weak the system becomes. It's how dependent everyone becomes on keeping alive. By this point, too much is at stake. Banks are intertwined with government debt. Pensions depend on stock markets. Retirements are tied to asset prices. Social programs rely on continuous borrowing. A collapse no longer hurts just the elite. It hurts everyone. So the system is protected, not because it's healthy, but because too many people will be destroyed if it failed. That's when a financial structure stops being an economy and starts being a hostage situation. Every time markets wobble, central banks step in. Every time debt grows too heavy, new tools appear to manage it. Every time inflation rises, the narrative shifts. It isn't chaos. It's controlled decay. And history is full of it. In late Roman times, the government debased the currency. The silver content of coins fell while their face value stayed the same. People noticed prices rising, but not why. In the 1970s, the United States ended the gold standard and expanded the money supply. Inflation surged, but the structure survived. In both cases, the system didn't collapse immediately. It stretched. Stage 6 systems stretch themselves thinner and thinner to avoid breaking. That stretching shows up everywhere. Housing becomes unaffordable because it's being used as a financial instrument. Stocks rise even when the economy weakens. Debt becomes permanent instead of temporary. The numbers still look impressive, but the purpose has changed. The system no longer exists to build prosperity. It exists to service itself. People sense this even if they can't explain it. That's why there's a constant background anxiety, a feeling that the future is being traded away for the present, that something is being drained. This is where political instability begins to emerge, not because of ideology, but because of pressure. Groups compete for shrinking purchasing power. Governments promise more than they can deliver. Social trust erodes as people realize the pie is no longer growing fast enough for everyone. Stage 6 is when unity becomes expensive. At this point, the system still functions, but it becomes brittle. Small disruptions create outsized reactions. A banking scare, a bond market wobble, a spike in energy prices. Everything feels like it could tip. That's why policymakers talk so much about confidence. Confidence becomes the real currency. As long as people believe the system will hold, it does. When that belief cracks, it doesn't break slowly. It snaps. But stage 6 is the last phase before that snap. It's the period where the system looks stable on the surface while being hollow underneath. And that's what makes it dangerous. Because by the time the signs become obvious, there is no longer enough stability left to fix them. What pushes a society out of stage 6 is rarely one dramatic event. It's usually a sequence of small shocks that expose how little margin for error remains. A banking crisis, a debt ceiling standoff, a surge in inflation, a geopolitical disruption. None of these destroy the system on their own, but together they force it to reveal its true condition. By this stage, governments have already used most of their tools. Interest rates can't rise much without crashing debt markets. Money printing fuels inflation. Austerity risks political unrest. So every response creates a new vulnerability. That's the trap. Stage 6 systems are boxed in by their own past decisions. The more they try to avoid pain earlier, the more fragile they become later. This is where the United States is now. Trillions in debt limit policy. A hyper-financialized economy amplifies shocks. A divided society reduces the ability to absorb hardship. It doesn't mean collapse is inevitable tomorrow. It means resilience is gone. In earlier stages, a country can take hits and recover. In stage 6, hits compound. That's why markets feel increasingly nervous. Why every crisis requires larger interventions than the last. Why debt never seems to go down. The system is still moving, but it's no longer healing. History shows that after stage 6, one of two paths appears. Either the system is forcibly reset through inflation, restructuring, or currency change, or it fractures under pressure. Neither looks like a movie collapse. They look like a long period of instability, where the rules keep changing. Savings lose meaning. Contracts get rewritten. Trust erodes. People don't lose everything in one moment. They lose it slowly. This is why the most important shift isn't financial. It's psychological. When people stop planning far into the future, when they prioritize survival over growth, when they no longer believe the system will reward patience, that is the real sign of late-stage collapse. And it's already happening. You can see it in how people invest, in how they spend, in how they think about work and security. Stage 6 doesn't announce itself. It leaks into everyday decisions. And by the time the numbers force the truth into the open, the damage is already done. The strange thing about living in stage 6 is that it doesn't feel like an ending. It feels like waiting. People sense that something has shifted, but they don't know what comes next. The old rules still operate, just badly. The future still exists, just faintly. This is the moment where outcomes become highly uneven. Some people adapt. Some people lose ground. Some people barely notice until it's too late. The difference is not intelligence. It's awareness. Late-stage systems reward those who understand what kind of world they're actually living in, not the one they were promised. That doesn't mean panic. It means realism. Understanding that debt-based systems eventually shift costs onto savers. That inflation is a form of quiet redistribution. That stability is not the same as safety. When you see stage 6 for what it is, decisions change. You stop assuming money will hold its value. You stop trusting that institutions will protect you. You start asking who benefits from how the system is designed. That question alone puts you ahead of most people, because collapse doesn't hurt everyone equally. It hurts those who assume the system will behave tomorrow the way it did yesterday. Every historical reset creates winners and losers. The winners aren't always the strongest. They're the ones who saw the pattern early enough to move. The United States is not unique. It's simply reaching the part of the cycle that all large, debt-based empires eventually reach. The uncomfortable truth is that stage 6 can last for years, sometimes decades, but it always ends the same way, not with stability, with change. And the people who navigate that change best are not the ones who cling hardest to the old story, but the ones who quietly adapt to the new one before it becomes obvious. If you want to understand where things are heading, keep watching this channel. We don't deal in panic or hype, only in patterns, history, and the signals most people miss. That awareness doesn't stop the cycle, but it lets you move through it with your eyes open.